Happy Sunday, guys. It's that time of the week where we go over the watch list and I will tell you what I'm looking at and why I'm looking at it. So just before we go into any particular setups, this video is going to be a little bit different to my regular Sunday videos because I'm looking at some very specific things and that's all I really want to talk about because I'm not paying attention to much else. So firstly, we'll start on the US dollar. Now, this will have caught a lot of general retail traders off guard because generally speaking, they look at price action, not really fundamentals or data releases and put pieces together. But you can see it's all mapped out here for you to see. So we had an aggressive move down on the dollar when we saw inflation, we saw a really, really bad NFP, and we saw unemployment come out relatively high. So this was a pretty bad sign really for the US, causing a cooling labor market. And this was what drove investors to start expecting the 50 basis point cut. Then again, repricing the dollar, pushing it further down. Then when we got this 50 basis point cut, we didn't see much movement, and that's because it's already been priced in. So as soon as we had this, it's a little bit interesting actually, and there's some sort of speculation in the market or around sort of investors, retail, or whoever else. Now, we obviously have elections coming. And now look, as soon as we get close to election period, look at what the dollar's doing and look at the data. All we've had is positive. Now, I'm not saying there's manipulation or it's been fluffed or anything like that. It's not my job to sit here and try and do that. I just react to what the data is. But since we had this, we had lower inflation, really, really high NFP, lower unemployment. We had obviously repricing here. So I didn't expect another 50 basis point cut after we had such good labor market data. We had inflation coming down. We have jobless claims going down, and general positive news for the US dollar as well here. So the US dollar is in key focus. I think it's going to keep heading higher. We might see pullbacks. Obviously, my general bias for the US dollar is much higher. Now, moving forwards, we also have the euro, the pound, and the yen. Now, the euro and the pound are sat in very similar positions. So the euros had very weak eurozone data. There's nothing really supportive to the euro at all. We are also looking at aggressive easing or aggressive aggressive cutting by the ECB and the BOE, so the Bank of England and the European Central Bank. Now, it's not quite the same situation here for the yen. So what's going on with the yen is there's essentially nothing supportive either. But what we saw was an intervention, unwinding of carry trade, so risk off. We saw hawkish tone by the Bank of Japan, and we saw a rate hike. Now, once that had all settled, we actually got more of a hawkish tone. No one really expected to have another rate hike. Then we got the change in leadership, causing some more hawkish tones within the market or for the yen. And then again, the Bank of Japan came out relatively dovish, saying that they're not in any landscape or the environment isn't right for rate cuts. Oh, sorry, rate hikes, I should say. Now, the problem is, the next question with the yen is, when do we get the intervention? When is that going to happen? Or are we even going to get one? And my answer is yes. We will always be at risk of interventions by the Bank of Japan or the MOF, sorry, not the Bank of Japan. But the problem is trying to time them is very, very difficult. So there's nothing we can do other than play what we see. We can't sit here and try and predict these interventions. All you can do is protect yourself. So if you're short the yen, long the dollar, so USD, JPY long, then you wouldn't really want to be trailing stops relatively tight and aggressively, obviously, unless you're willing to risk. But overall, the yen is bearish, but just be very cautious. Now, another interesting thing is if we look here, so this is the COT data, so we can see what's going on with COT data. Where are they positioning themselves? Well, if we look at the euro, they were actually relatively bullish on the euro, and now it's slid down quite aggressively. So the euro is flipped to bearish in COT sentiment. Now, the USD is still looking quite bearish. However, that doesn't impact what I'm doing too much because I'm playing the data. I don't pay attention too much to COT. It's more just some guidance. And again, if we look at the yen here, we did see a pop to the upside, but it looks like we are now starting to see a little bit less of this bullish momentum. So you can see we've gone from the net positions of 9.513 lots to a net position of 6.8. Sorry, it's a bit hard to see here. 6.826. So we are seeing a little bit of a decrease, although actually, it was 9.513, and it's gone down to 6.826. So we are seeing a decrease here on the yen. So CAT data isn't telling us too much here, other than the euro is bearish, They're bearish or turning a little bit more bearish on the yen, and the dollar is actually staying the same. It's kind of still moving to the downside. But again, it's not a huge factor for the way I trade. So just moving back to the dollar here, if we look at the labor markets, what we've got is wage growth. We've got wage growth going up. We've got job openings, also had a pop to the upside here. Unemployment is moving its way down, and the unemployment rate here is also moving down. And finally, NFP had a nice pop to the upside at this 254K. So that's what I'm talking about when I say the labor market looks like it's picking up a little bit. The data is quite positive. So if we go here and look on the top setups on the Edge Finder, we've got the Euro USD is bearish with a reading of -8, which is really, really good. So the only real positive thing here is the interest rates and the PMI. Now, obviously, interest rates don't count too much because we are in the middle of the sort of easing cycle by the Fed and the ECB, and the ECB is obviously looking to cut more aggressively. Now, if we pay attention also to the bullish setups here, we've got the DAX, the NASDAQ, Nikkei, S&P 500, and we have got, oh, actually, that's it. The Dow has gone off here, but it seems like we're in a very sort of indice heavy market at the moment. So bearish on the euro, bearish on the pound, bullish on the dollar, bullish on the US stock markets as well. So moving on to some setups, what are we looking at? Well, we're looking to basically repeat what we did last week. So last week we had a great week. So if you look here, we took a 2% trade on the pound dollar. We took break even on euro AUD. We took a 1% here on euro dollar. We took a 1% loss on silver. We took 2.65% gain on pound dollar. And we took a very small 0.3% gain here on euro dollar. So you can see we were playing the US dollar very, very well against the two weak currencies, which is the euro and the pound. If you want access to profitable signals with professionally written trade ideas to back these trades up, and to learn real trading standards with technical analysis and geopolitical and macroeconomic education with our videos and PDF resources, live webinars, and our proprietary research documents sent directly to you, then you can join our private Discord at EliteTraders.io. Anyway, back to the video. So you can see the trades here. Obviously, these were called in the Discord for our members. So we're looking to essentially just rinse and repeat, do exactly the same thing. So we had a little bit of a pullback here on Friday, or on Thursday, I should say, sorry. But this wasn't sustained. So you can see actually on Thursday, we had a really strong bullish candle. Friday actually opened very, very bullish. We did see for the majority of Friday, actually, we saw a lot of buying interest. And then towards the end of the day, we did see some sellers come in and push this candle back down. And this isn't really off any level of resistance or support. So what I'm looking for is the first target here is 1.287 on pound dollar. So I'm basically just going to be day trading this pair all the way down. I have no interest in getting into swing trades. So if we look here, we could have possibly one opportunity to swing trade with. The problem is here though, it's a really tight stop. So I would ideally want my stop to be sort of 107 pips, and this is a 1 to 2, which obviously a 1 to 2 is fine. There's no problem with that. However, if we can day trade and get these 1 to 2s, 1 to 2.6, obviously in a much shorter period of time, then why not do that? Why not take multiple of those rather than just trying to get into one swing trade and potentially half our profit? So for me, that's not ideal. So I'm happy to continue this day trading strategy that I'm on. Similar thing with the euro here. So we are looking really just to capitalize on these short-term pullbacks, get into short positions and ride this down. Now, if we look on the daily chart, we had a very similar thing that I mentioned on the US dollar. However, this time we did bounce off the supports, but we saw a really strong bullish candle on Thursday. And then on Friday, we did see a little bit of a continuation before there was a large amount of selling coming into this market. So for euro dollar, what I want to see is a closure, or a candle closure below this level. If we can see the candle close, then I will happily start getting into some more short positions. But right now, selling at this level is a little bit too risky for me. Not too interested in doing that. Now, I know gold is on a lot of people's watch lists. It has been basically all year. Gold has been a huge runner. So the real issue with gold is, how do we get in? So I was actually for a very short period of time, I was actually a little bit bearish on gold just because of the really strong data coming out of the US. However, we do obviously still have a lot of supporting factors, such as tensions in the Middle East. We've got the US elections as well, and we are still in a global cutting cycle. I mean, obviously not the yen and the Bank of Australia, but generally speaking, there's a lot of banks cutting, which is attracting investors to safe havens such as gold. So really what we want to do is look for these pullbacks within gold. And my target remains at 3,000. I've been talking about this 3,000 level for the past sort of 2 months, 3 months, I think. So it's a case really of how do we get in? And it's very difficult because for me, I've not seen any valid entries. The only real entry I've seen for the past, I'd say 3 weeks, maybe even 4 weeks, is one, which is right here. This pullback would have been okay, but it just wasn't ideal, so I didn't take it, unfortunately. So we are paying attention to gold, but yeah, right now there is no way to get in. So we'll send a signal to the members, when we can, if we do get that entry. Now, the next one is the S&P, because the S&P is, again, on a huge run. We've seen a great year for the indices markets, but getting in, again, has been a little bit tricky. So I did have an order here, but I didn't place it. So I was planning this trade. So you can see we've had this really nice trend line to the upside. We had the fib 50% level, and this lined up with previous resistance. So it was a great break and retest. We also tested this trend line. The RSI was oversold. So it was, on paper, it was a great trade. And to be honest, the only reason I didn't take it was just because I wasn't paying attention. I just wasn't looking at this market at the time. So I missed it. However, we may get another entry opportunity on Monday when markets open. So we'll see about this. But to be honest, it's just a little bit too expensive for me to be buying right now. Obviously, like I said, we've had a huge run. And I wouldn't be a bad thing to see if we did see a slightly deeper pullback before we headed further up. Now, the dollar yen is a bit of an interesting one as well, because I was in a personal position around here. Now, I closed it around break even because I wasn't willing to hold it over the weekend, just personal things. However, I'm still bullish on this asset. So if we really zoom out and take a look at what's going on, we've got the weak yen, we've got strong US dollar data. And we do just have a general bullish sentiment around the yen, around the dollar against the yen. So I'm looking for a full correction, to be honest, at the 161 level. But the problem is, again, just trying to get in is a little bit risky. And obviously, like I said earlier, we are at risk of interventions. So we just need to be very, very cautious with our entry. We need to wait for a really deep pullback to get in. And now if we do have an intervention when we are slightly higher up, then we're completely fine to continue holding. But what we don't want to do is obviously buy into this resistance, get caught in some sort of intervention or a change of tone by the Bank of Japan, because it's very, very difficult to predict what they're going to do. They seem to be a little bit more secretive than the other central banks. Normally we get some signals and some hints, but this time, or generally with the Bank of Japan, that's not the case. So that is about it for this week's video. I know it's been a little bit different to my regular Sunday videos, but as I said, I'm only looking at a handful of things, which is obviously the dollar, the pound and the euro, and possibly the yen as well. So I hope you got some value out of this. Let me know in the comments, leave a like and subscribe. If you want to join the Discord, you can click the link in the description and you can come and trade along with me and the members.